Hey guys, this is Eric with Eric and Nikki, and today I'm going to tell you about the #1 way to get into properties with none of your own money and to create a massive rental portfolio, whether it's in single family or commercial. Stay tuned, listen up, and as always, smash that like button, hit that subscribe button, and leave us a comment. What I was referring to is the BRRRR method. Buy, rehab, rent, refinance, repeat. We're gonna go over each step, what it looks like, how do you do it, how can you do it without any money, how can you do it if you have a ton of money, what are the best ways, what are the best practices to do. There's a ton of people that go over BRRRR and how it's done. I'm gonna go into the details of each one and make sure you understand that sometimes you can skip a step, sometimes you can get away with doing a quicker method, and sometimes you can even do it with multi-million-dollar properties. First and foremost is the B. The B is the buy. I think this is the most important to the whole BRRRR method. If you are not buying well, you are not buying in general, you have the fear holding you back from actually making the move, then you're never going to be able to do this strategy. Not only the fear holding you back, but also maybe the price is a little too close. Dive into the deal so much that you can't pull the trigger. Make your money on the buy, but you also actually have to buy. There's gotta be a happy medium in between there where you are doing the deal, making sure you're underwriting correctly, but you also want to pull the trigger. You have to take a little bit of risk. The buy on anything. You can buy a single family rental, you just gotta make sure it fits your numbers. You can buy a quad, you can buy an apartment complex, you can buy a commercial building. I personally have BRRRR'd a single family home, a triplex, duplex, and quadplex, an apartment complex, and a commercial building. I have done them all. They all have their inner workings that may be a little bit different, but they all started with the purchase. With your purchase, it's hard to do, but I always like to try and be about 75% of the value, including rehab. Now, that is not always possible. If it's not possible, either don't buy the property or be okay with leaving a little bit of cash in. #2, buy, rehab, the first R. This one is very subjective. So I have did deals that I have bought so well that I didn't have to rehab it. I have done deals that I bought and I had to put $150,000 into it for the rehab. Both ended up working out extremely well on the BRRRR method because my ARV was set. So you don't always have to rehab the property. Rehabbing the property is where you think that you're gonna get that increased value. But if you buy it right, the value's already there the second you sign the paperwork. With your rehab, if you've done it before, you can get a contractor, you can sub everything out, you can do it yourself even. But on the rehab, you wanna make sure you keep within the budget because that's what's gonna take later on to make sure you actually get all your money out of the property. With the buy, the rehab, and then the rent. So the rent is a huge part of it. Can you get it rented quickly? How long does it take to get it rented? Our apartment complex, for instance, was already rented, right? We didn't have to go through that. Now, one of the units we rehab, our commercial building, however, was completely vacant. So we are having to take a little bit more time to get it actually rented to be able to do the third R, which was the refi. So it takes a little bit of time. Make sure in this process, in my opinion, if it's a commercial, make sure you have a broker that you like, a good commercial broker that can help you get leased up. If it is in the residential side, make sure you have a good property manager. Those things have been extremely important in the rental aspect for me. Not everybody loves to do rental themselves. I personally do not like doing rental myself. I like to make sure that I'm handing that over to a professional that can handle that work and can do it efficiently. That's the biggest thing for me. Time, money, efficiency is both of those. Again, buy, rehab, rent, and the third one is refinance. With the original purchase, all right, I told you that you could buy without using your own money. With buying without using your own money, you're going to use what's called hard money. I'll leave a video explaining exactly what hard money is. We did that earlier. But you take your hard money loan, you purchase your property. If you find the right lender for your hard money, then they will do the purchase, they will do the rehab, and they will potentially do everything on the back end. So you have very little upfront cost. So you get through the process, you get it rented, and you get into the refinance of your property. There is what I call kind of hard money refinance. There is bank refinance, and then there is private lender refinance. The kind of hard money is your Lending Home, Lending One, Lima One, Civic. These are all the bigger hedge fund style hard money lenders that have a 30-year product. Their interest rate is normally a little bit higher, and they're normally interest only. It is a good option for somebody with no income. It's a great option for somebody with, okay credit. You don't have great credit, but you can still get out of it because they really go more off the asset. Does it hit a certain debt service coverage ratio? And remember that term, debt service coverage ratio. Does it hit a certain debt coverage ratio? And can it cover everything else with that debt service coverage ratio? Any of those lenders are good for starting out. Now, banks are the best. Best rates, best terms. Most of the time, they're going to allow you to have a 70% for a cash out refi or a 75% for a non-cash out refi. So if you're just trying to, get all your money back that you put into it, then a bank is a great option. But with a bank, you have to have better than decent credit. You have to have a history of income. Sometimes they're gonna want you to have deposits with that bank. So that may not always be the best option for you. See what's best. Now, I will have to say that before you purchase, before you do the B, I would definitely figure out what's gonna be your final R. Who are you gonna take the deal out with? What are their expectations? And find out what I call buckets. The lender that you're working with, what is their taste for short-term rental? What is their taste for long-term rental? What is their taste for multifamily? What is their taste for commercial? What bucket is that lender in? And they're gonna come back and they're gonna tell you, hey, we want only single family rental right now. Or we want only triple net commercial. Or we want only multifamily and single family rental. You wanna make sure that you know up front who's going to take out the deal, because if you sit there for 12 months in hard money, you're gonna eat up your profit and you're gonna have to leave a lot of money in the deal. And it just doesn't work out real well in the end. The last R, the money maker, the repeat. Once you do all the things we talked about, the buy, hard money, cash, the rehab, the rent, and the refinance, now you have a debted property that cash flows well and grows your net worth, and you can go and repeat that process. The biggest thing is don't be afraid to do bigger deals. Don't be afraid to do a commercial deal. You can do an apartment deal. Matter of fact, I'll link our apartment deal that I showed you where we did a BUR method without any rehab. We did it immediately. Don't be afraid to do bigger deals with the BUR method. The BUR method can be your most tremendous way to gain wealth very quickly with little cash out of pocket. As always, guys, leave us a comment. Let us know how we can help you, and hit that subscribe button, hit that like button. Thanks for your time.